Hi everybody, welcome to the webinar. I'm Anne and I'm here with Cedric.
Hi there.
And we're here today to talk to you about what the best practitioners are doing to elevate their practice. So when we say elevate, of course, we're talking about financially elevate, but we're also talking about how to give you more time and more opportunities to help more patients ultimately. So if you haven't heard of Holistic Business Advisors before, we'll just give you a quick background on us. So we are Canada's only tax and consulting firm that exclusively serves holistic practitioners. So we are now the biggest tax firm for NDs in the country, which is super exciting.
Yeah, great.
Yeah, a little bit of background on us individually, in case you're wondering. I am a holistic practitioner myself, so I am an acupuncturist and TCM practitioner, and I originally founded Holistic Business Advisors because when I started practicing, when I went into the world and realized that I had to be an entrepreneur, there was this huge piece missing in terms of how I could understand and relate to people who were providing me tax, accounting, and financial advice. And so that's why I started HBA, because I realized that my needs were not being met, and there was this big gap between what I knew and also what I was lacking in terms of my knowledge in those areas. And then talking to professionals in that sphere, so finance, accounting, tax professionals, they just didn't understand me. So that's the main reason that I started, and I'm here to make sure that everything we do, although it's technical, and although we're talking about some complex subjects like accounting, finance, tax, it's in a language that people like us, practitioners, can really understand and use. So that's my background. Like I said, I'm here with Cedric. He's going to be the main star of the webinar today.
Wow, that sounds exciting. I like to think usually you're the star when we do things, but
it's true.
It's different today.
It's true. Usually I am the star of what we do, but today I'm letting Cedric take over. So he is definitely the technical side of Holistic Business Advisors. So he is a chartered professional accountant. He's got his MBA from one of the top few Ivy League schools globally. Previous chief of staff of Canada's largest professional services and accounting firm. So he really brings deep business, finance expertise to the table. So before we get started, I just want to mention that we want to keep this webinar as interactive as possible. We want to be able to answer your questions and make it more of a conversation. So there's a question box, so make sure you ask your questions. We've reserved time at the end of the webinar to go through those questions with you, and we'll try and answer as many of them as we can. All right, so
we should probably also tell them that we're married to each other, right? That seems like an important detail. Maybe it's just me and I think it's important and you don't think it's important. How do you feel about that? Should we tell them?
I mean,
the cat's out of the bag. I already said it.
We can tell them. So now you know.
We are married. If you see Anne teasing me, that's not because she's a mean person and is mean to her guests on these webinars.
It's because I'm allowed to.
She's allowed to.
I get a free pass.
I'm not allowed to make fun of you. You're allowed to make fun of me. That's the way these things work.
Exactly. It's a one-way free pass. All right. So now that we know everything about us, the background.
What's your favorite food? Should we talk about? It's avocados.
It's probably avocados.
We're talking to the right audience.
We'll save that at the end. Okay. So let's get right into it then. Cedric, why don't you tell us what the best NDs are doing for their practice?
Yeah, I mean, that's a great question, right? So we're privileged to work with hundreds of NDs across the country. And this is everything from new people who are just starting out, who just graduated 3 months ago and are trying to find their feet, to people who've been practicing for, in some cases, a decade or more. And so we're really able to see the full breadth of what people are doing. And the great thing about us, given that we're tax accountants and we give general business advice, is we get to see behind the scenes. We get to peel back that curtain and see their finances. We talk with them on a regular basis. So we can see whether their plans are successful. We can see what differentiates the good practitioners from the great practitioners. And we actually get to see the nitty gritty of what goes on behind the scenes. So when people talk about, oh, I run a 6-figure practice, but they don't tell you about all the other stuff, we get to see that. If you see a massive increase in, I don't know, their Instagram number of viewers or the likes that they're getting, we get to see a lot of the details on what led to that happening. So we wanted to take the opportunity to share some of those insights that we've been able to glean over the years. So the first thing that we see that differentiates the great from the good are that they work hard and they work smart. So what I mean by that is they are critical thinkers. The same great critical thinking skills that they have when they read a journal article, for example, they apply those same critical thinking skills to deciding on different business methods, to evaluating business and marketing advice that they receive. They apply those great critical thinking skills, not just to their practice and when they're dealing with their patients, but also when they're monitoring their business and their business performance. So I would say that's the first thing. So they work hard, they work smart, they question those who give them business advice and use that critical thinking skills, monitor their performance to see, if I implemented this strategy, is it actually paying off, or is it just the passage of time that's helping me grow my growth? Those are the sort of things that they do. The second thing that we noted is that they take control. And you know all about being controlling, right? Was I not supposed to say that?
Maybe you should say
Maybe
that.
I shouldn't say that.
Save
Anyways,
that for the end.
they take control. And when I say that, I mean it's in that role of being an entrepreneur. And I always say that when you graduate, you're going to be an excellent clinician, right? There's excellent programs and colleges out there that provide a fantastic education. You're going to be an excellent clinician. But what the world is going to demand is that you be an entrepreneur as well, and perhaps even more so than being a clinician. So the ones who are truly successful, who that we see, really growing their businesses, when I say they take control, I mean they appreciate the benefits and the freedom that come with being an entrepreneur. So the fact that you don't have to have set hours, that you don't have a boss, you get to do what you want, when you want, they love those aspects of being an entrepreneur. For them, that's where they get energy from. I know it's not for everyone. A lot of people like some more control and structure in their life, but what we see is that even those people who are predisposed that way, they ultimately embrace all the positives that come with being an entrepreneur, and that's the way that they take control. The third thing that I see is that they set up their businesses properly. And this is a big area, and we could probably talk for 20 hours on setting up your business properly, but I'll talk about it in a very narrow sense right now. And when I say that they set up their businesses properly, I mean that they do it the same way that all entrepreneurs do it. And I'm not talking just about healthcare entrepreneurs or just NDs even in particular. I'm talking about all entrepreneurs. So when you open up Instagram or newspapers and you see Elon Musk and whoever else who are these great successful entrepreneurs, Jeff Bezos, maybe I should throw some women in there. So the CEO of Spanx, all those people who are true entrepreneurs and set up their business the right way, that's the same thing that a lot of successful NDs are doing. And a big component of that, of setting up their businesses properly, is effectively using a corporation.
Yeah, so like I mentioned, when I started Holistic Business Advisors, I was newly graduated and I realized that there was this huge lack of knowledge that was available to me and help that was available to me that I actually understood. And a big part of that was a lot of these like myths and misinformation that I heard. And a lot of it was around corporations. So I remember that I would hear some things about corporations, but I didn't really understand a lot of it. Probably because a lot of the people telling me that information didn't really know what they were talking about
They
either.
probably couldn't spell corporations, right?
Probably. But so, Cedric, let's start with the basics when it comes to corporations to get everybody on the same page. So, what are corporations?
Yeah, that's a great question. So let's start with the basics. What are corporations? And I'll maybe even take a step back from there and talk about the different types of practice structures. And by that, I mean the different ways that you can conduct your business. So we have the default types. And when I say default types, I mean you don't need to do anything. You just start running your business. That's it. And if you do that by yourself, you're called a sole proprietor. If you do that with one or more other people, you're a partner. It's part of a partnership. You don't have to do any kind of registration. You don't have to pay any fees. There's very few actual requirements, especially in naturopathy, in order to just start running your practice as a sole proprietor or a partner. And the difference is just, like I said, if you do it by yourself, you're automatically a sole proprietor. If you're doing it with someone else, you're a partner with them. Those are what I like to call the default types. So I'll nail this one. Maybe I'll give some more examples here. If you are an associate, let's say you just graduated, you're an associate working at a clinic, you're going to be a sole proprietor. You don't need to register. You don't need to do anything different. We hear a lot of myths around that you need to register or get a GST or HST number. But no, that's not true in a lot of cases, especially, like I said, with NDs. You just start practicing, and because you're doing it by yourself, you are known as a sole proprietor. Now, let's say you graduated and you and your best friend, or maybe Anne, you and me, we decide to start our own business. We decide to start our own clinic together. That would be a partnership because it's two people operating together. We don't have to file any paperwork. We just start running our business, and the government, the CRA, everybody, because we're doing it together, they'll view us as a partner. Now that contrasts with a corporation. A corporation is a non-default type of structure, meaning you have to do some additional paperwork in order to set this up. If you and I just start practicing, or if I by myself just start practicing, I would be in that camp of sole proprietor or partnership. And if I wanted to start operating as a corporation, I would have to do a bunch of things before that. I would have to file different paperwork with the government to create this corporation. So a corporation is a separate legal entity, different from myself. So first thing that I would have to do was set that up with the government. It's called filing your articles of incorporation. I would have to, maybe go to a lawyer or to an accountant to have them assist me with that. Various formal steps that you need to do, just a bunch of paperwork in order to set up this separate legal entity in order to practice through a corporation. That would be the first step. And then afterwards, I would continue operating through this corporation, which is just a separate entity different from myself. I guess that's the key difference between a corporation and those default types of sole proprietorships and partnership. It's that a corporation is a separate legal entity. It's different from yourself. Whereas with a sole proprietor, you're just one. So from a tax perspective, from a legal perspective, everyone views you and your business as being one and the same. Whereas with a corporation, it's you, the person, versus the corporation, two separate legal entities.
Okay, so that makes sense. I think we're all on the same page now. A corporation is a separate type of practice structure, and we've got to take some steps to set it up. But let's talk practically, because I think most of us are interested in that practical element. So practically, if I'm an associate at a clinic, let's say, what's the difference that I would notice between being a sole proprietor versus operating through a corporation?
I mean, that's a great question, right? So I just gave you the technical mumbo jumbo, and it sounded like what a professor might say in their class, right? It was all very theoretical. So practically speaking, what does it mean that a corporation is a separate legal entity and a non-default? Like, what does that all mean? That's what you're asking, right?
Exactly.
Yeah. So from a practical differences, let's think about it from maybe two perspectives. On the front end, so the side that's treating patients, etc., there's negligible difference, right? You might have a different name on the receipt that you give your patients. So instead of saying Cedric Gomez, ND, if I was an ND, I wish I was an ND.
Which you're definitely not.
I'm not skilled enough to be an ND. Instead of saying that name on the receipt, it might say Cedric Gomez Inc. or Cedric Gomez Professional Corporation. So that's one subtle difference. The receipt might be different. Your name that you put on your formal documents, like your receipts, your contracts with a clinic, if you're an associate, those would all be different. That's on the front end, pretty minimal changes, but you're still treating the patient. They're still coming to your clinic every day and seeing you. Nothing's different there. On the back end, so behind the scenes, there are some differences, but candidly, really not big ones. I mean, you'll have to file an additional tax return. I think that's a big difference. But the way I would describe it maybe tangibly is that once you start operating through a corporation, it means that all the cash from your practice has to flow through a separate corporate bank account. So it's a separate bank account that's owned by the corporation. Now, it's not anything fancy. It's just a typical business bank account that anyone can get, but it just happens to be in the name of the corporation instead of in your own individual name. So in the example I just gave, instead of having a bank account and instead of all that cash going to Cedric Gomez's bank account, it would go to Cedric Gomez Corporation's bank account. So that's one tangible difference that I think a lot of people might pick up on. Aside from that, I mean, there's a lot of administrative things. I mentioned the tax return. There's some additional filings, but I don't like to play up that part too much because it's all stuff that your accountant, your business advisor can help you with. It's not stuff that you necessarily need to do.
Okay, so that makes it pretty easy. I mean, I think a lot of practitioners and NDs already have a business bank account. So essentially, there's not much difference there. Some administrative differences, but not too many practical differences that the patients would notice anyways.
Exactly, like nothing that is in front of your patients. They would have no idea.
Yeah, okay. So why don't you share, why do those successful NDs, like those who are most successful, why do they use corporations?
Yeah, so I guess we're getting to the heart of the matter now, right? So we talked about what a corporation is, what the practical differences are. Now we're going to tie it back to those key differences that we see from the successful NDs. Why is it that they use a corporation? And rather than focus on the benefits, I always want to talk about the pros and the cons. We have to talk about both sides of the things. So for me, I mean, and for anyone, the biggest pro is the tax savings, right? So for those of you who set up a corporation correctly, you can halve the amount of taxes you pay, cut them in half, right? And usually taxes are the biggest expense that most practitioners will have. So imagine that, right? Imagine being able to cut in half your biggest expense. Most people would love that sort of opportunity, right? It's more money in your pocket. It's more to invest back in your practice. It's a great thing. Other than that, there's some smaller ones. These are more impactful in other businesses. Naturopathy has a lot of specific rules, so these aren't as big, but there's some smaller ones. If you're a clinic owner, you have some additional legal protection. There's a few caveats for that. We won't get into all the details here. I also put on there on the slides that you get this feeling of being more professional. It's not a tangible benefit, but I can definitely see how being incorporated makes people feel like they're real business people. They've finally graduated from being a student their entire lives to being this big business person once they take that step. We hear that from a lot of our clients. On the cons, I mentioned we have to keep this balanced. In terms of cons, I think these are all interrelated here, right? So there are higher costs, but these are almost a non-factor. And I say that because the only reason you're going to incur these higher costs is if your tax savings outweigh them, right? So anyone who's advising you, they'll usually play down these fees because you're only going to incur those fees if there's a bigger benefit around it. So the key thing is just having a good advisor who can crunch the numbers for you, make sure it's worth it. So when you are paying those higher fees, you're getting more than enough tax savings to offset those higher fees. So it's a net benefit for you. So it is a con, but it's almost like a partial con, if that's a thing. The other things are, it certainly requires more paperwork to run a corporation. no doubt about that. But the great thing is you can outsource all of this, right? Like with HBA, for example, all our clients get a lot of benefit from us being a one-stop shop. So whether it's the initial setup of the corporation or ongoing maintenance, we stay on top of all that paperwork so our NDs can focus on treating patients. So that's a balanced perspective on the pros and the cons. If I was to summarize it all up, it's the pros of the tax saving. That's the reason that most people, and especially most NDs, will do this. Yeah, there's some cons, there's some higher fees, but the goal is making sure you have a good advisor so that they can tell you when those higher tax savings are going to offset those higher costs and the higher administrative burden.
Good. So that was a great overview. I think we all understand now that the key reason NDs incorporate is for those substantial tax savings. So that makes sense. But why don't you get into a little bit more detail without getting too much into the numbers on how those tax...
I don't know if I can promise that. I'm an accountant. I like numbers, right?
I'll try and hold you to it.
You have to rein me in.
Yes, I will. Always reining you in. So why don't we talk a little bit about how the tax savings work and then also like how substantial those tax savings could be?
Sure. I mean, that's the heart of it, right? So as we keep progressing here, we're digging deeper and deeper into things so you can understand some of the actual benefits. So I did say the taxes are the biggest reason. So, we can't get into all the details in the time we have, but why don't I go through maybe at a high level, and I'll give you some examples here. So there are two ways that you can save through a corporation, two types of tax savings. The first is that corporations pay income taxes at a lower rate than sole proprietors and individuals. So if you're a sole proprietor, if you're a partner in a partnership in Ontario, for example, you're going to pay tax at anywhere from 20 to 50%. Now compare that to a corporate tax rate of 12.5%. So that's a big source of saving, right? It's almost half of even the lowest tax rate at a personal level. So that's the first area of saving. The second is because of CPP, and that is the Canada Pension Plan. As a sole proprietor, you have to pay 10% CPP tax, which is double what a regular employee has to pay. And then you get the same benefit that they do when you retire. So for most self-employed people, not just NDs, but really any self-employed person, they don't like contributing to CPP because you have to pay double what a normal person pays, and you get the same benefit. If you do the math, it works out to a pretty negligible benefit that you're getting. And the good thing is that with a corporation, you can opt out of it. So that's how it works at a high level. We can go through some examples if you'd like.
Let's do the numbers, high level.
High level numbers. Okay, so let's go through an example. Let's say you are Sarah, and Sarah is an associate making $50,000 a year. And these aren't clients. These aren't client people. We've rounded all the numbers, but it is actual. So all the numbers you're seeing are actual numbers. We haven't made them up. It's, if Sarah making $50,000 as an associate did a tax return, this is what her numbers would be. So this chart here, there's a lot of colors. I do like the colors here. In the blue, it shows you what Sarah would be making after tax. So her income minus any taxes that she has to pay. The blue shows what her after-tax income would be as a sole proprietor. And in orange would be what it would be if she were incorporated, if she was practicing through a corporation. So the higher that those blue and orange bars are, the better. And those dotted parts there is the amount of taxes that she has to pay. So as a sole proprietor, the left side of that in blue, Sarah's going to pay about $12,000 in taxes, but that would get cut almost in half to $6,000 if she were incorporated. So it's $5,800, almost $6,000 of savings on $50,000 of earnings. So I mean, that's very substantial, right? Another example, if we have Jane, who's a clinic owner making, let's say, $150,000 a year, the benefits are even greater, right? So she'll be saving over $30,000 a year in taxes, Jane would, if she was incorporated.
Awesome. So really substantial tax savings, but we like to be holistic in anything we do and transparent. So that's the savings, but let's talk about the costs because, like we discussed before, you would only want to incorporate if the costs of setting up and maintaining that corporation are less than the tax savings that you would get through having a corporation. So
Yeah.
let's talk about some of those costs now.
Yeah, absolutely. And we started this whole thing off by saying the good NDs are they work smart, they're critical thinkers, and that's a great critical thinking question, right? So right here on this chart, we're showing just the tax savings, but what about the costs that go along with this? So absolutely, let's talk about that. And the way I think about cost is almost in two parts, right? So you have the initial costs of setting up a corporation. So you're only going to incur that one time. For us, whenever we're advising NDs, we like to set aside the initial cost because you're going to incur that no matter what, right? The only question is when you're incurring it, whether it's this year or next year or the year after. And any costs that you pay up front, you're going to get the benefit of that in the next 20, 30, 40 years. So, whatever amount I tell you, you almost have to divide it by your projected career because you're paying it over that amount of time. It's kind of like buying a house, right? When you buy a house, there's a big upfront cost, but you're going to live there for the next 5, 10, 20 years, whatever it is. So when you're setting up a corporation, the initial cost will probably be around $2,000 to $3,000. It depends on who's doing it. With us, for example, we charge $1,000, and then there's various government fees, Kono fees if you're Ontario, other colleges if you're outside of Ontario, additional fees on top of that. Definitely pick your advisor carefully. We've heard of some people who pay $20,000 to incorporate, which to us is egregious. You're clearly abusing someone at that point if you're charging them something so egregious or something that's that we charge not that much for. So always ask that question. And that's the initial part. And then on an ongoing basis, you're going to pay another $2,000 to $3,000, let's say. So if I think about Sarah, my quick math would say she's paying $2,000 to $3,000 each year in order to save $5,800, right? So even in Sarah's situation where she's making $50,000, it's still worth it, right? And the savings only go up from there.
Yeah, great. So we can definitely see why NDs who are doing this can be as successful as they are because ultimately you're going to have more money. And it's not just that direct financial impact, but it's also the time that you will get because you have more money. You're going to be able to have more opportunities to use that money to grow your practice, to reach more patients, to help more people.
Absolutely, yeah.
So, big impact there. So, we talk a lot about how helping NDs with these things can help advance naturopathy in Canada on a large scale. So I'd love, Cedric, if you could talk a bit more about that, how this is helping advance the profession on that larger scale.
Yeah, I mean, for me, quite honestly, this is something that I love to talk about the most, right? It's not about helping individual NDs. I mean, it is about that ultimately, but it's also about helping patients. It's about helping the profession, everyone throughout Canada, everyone in the ecosystem, I think, benefits from this. I'm a firm believer that helping build these business skills, the use of a corporation is a key pillar of that. I think it's something that's going to help advance naturopathy throughout the country. And I speak about it in a few different ways. I think it helps make NDs more financially secure. I think it'll help us reach even more people as those NDs become more financially secure and are able to reinvest in themselves, able to reinvest in their practices, in their patients. Everyone benefits from this, right? So if you're Sarah making $50,000 a year, imagine being able to put an extra $5,000 towards your student loans, right? Paying off that debt that much quicker. $5,000 a year towards paying that down. Or if you're Jane, who can put an extra $30,000 to renovating her clinic, That's an amazing, impactful amount every single year. And that's what we mean by elevating your practice and adding financial stability. And I think the really neat thing is that it's not just you, the practitioner, who benefits, it's your patients too, right? Because you can reinvest in yourself, in your practice, in your patients. And, just imagine if all across the country, if we had 1,000 or more NDs who are putting back thousands of dollars back into their practice and back into their patients. Think of that kind of massive, impactful scale. That to me is going to do wonders to advance the profession on a truly massive scale.
Absolutely. Yeah, that's such a beautiful vision of success, not only for individual NDs and practitioners, but the profession on a whole, on a large scale.
Yeah, absolutely.
Yeah.
Absolutely. And everyone else is doing this. You've got not just in healthcare, you've got chiropractors, accountants, medical doctors, lawyers. Everyone is taking advantage of this. So we want to make sure that there's a lot of education out there to also help NDs advance their profession as well.
Absolutely. Yeah. So I think probably the question on everybody's mind right now is, how do you know when the time is right to incorporate, right? So whether you're a new ND who has just, been in their first couple years of practice, or you've been practicing for several years, like when does it make sense to incorporate?
Yeah, I mean, I love how practical we're getting here, right? So that's the key question that I'm sure is on a lot of people's minds is, now that we know what using a corporation means, now that we know that there's tax savings, that's a big benefit that comes with it. When should I do it? Should I do it when I just graduate? Should I wait a little bit? And the key thing is to consult with your business advisor. That's the number one thing I'll say, right? So your accountant should be monitoring this. They should be letting you know when you need to give it some serious thought, right? And unfortunately, I say should because we've heard from enough NDs where we know this doesn't happen, unfortunately. It's also complicated. It depends a lot on individual factors. So, the first thing I'll say is you should get an incorporation assessment, an individual customized one, before you dive in. So all that said, we've come up with this handy checklist for when you need to seriously consider it. So we've got 3 things, and the third one is sort of a multi-part one. We'll show you what it is. So the first is that you should have used up all of your tuition credits. So I won't go into the details of what tuition credits means, but basically it's a ways to avoid taxes in the first place, right? So if you're at CCNM, let's say, and you pay $20,000 a year in taxes, what it essentially means is, or $20,000 a year in tuition, what it means is that your first $20,000 of earnings when you're a business person, that's going to be tax-free. You can use those $20,000 of tuition credits to offset your first $20,000 of income. So, corporations as well as tuition credits, there are ways to avoid paying taxes. So you want to make sure that you use it up first, right? There's no point in incorporating if you still have tuition credits left over. And this is an area where your accountant, they can let you know how many tuition credits you have, what the status is. They can give you all the details of that. The second is that you want your income to be stable or growing. So if you're about to go on maternity leave, for example, or if your earnings are up and down each year, my suggestion is hold off and wait till you're in a more stable position. And third, and this is a 3-parter. So you need to meet the first 2, the tuition credits, and then stable or growing income, and then one of the 3 on this last one here. So the final thing is we want to look at how much you're making and saving. So this is where it gets really individual. You want to make sure you hit one of these 3 criteria. And the first of those is that you're making over $50,000. And that means that your revenue minus your business expenses, your income, that's over $50,000. The second is if you're saving more than $20,000 to $30,000 a year. So what I mean here by savings is it's the amount you have left over after you pay for all your personal expenses like rent, your mortgage, vacation, all that. And the last one, if you meet this one, if you have a partner or a parent whose income you can rely on, right? So, I'm a good example, right? I'm fortunate enough to have a spouse whose income I can rely on. I would meet this criterion, right? So I still make my own money, but I can rely on yours if I needed to, right? So I would meet that third criterion there.
And I'll be the first to remind you of that every day. All right, so that is a great checklist for us. Like Cedric said, you want to make sure that you meet the first two criteria and then one of the third criteria there in order to consider whether incorporation is right for you. So I know we threw a lot of content at you guys today. We are going to take some questions now, but for those of you who want to learn more, or if you want one of those customized incorporation assessments that Cedric had talked about, you can visit our website here for more information. So holisticbusinessadvisors.com/incorporation, and you can check that out. So let's do some questions now. We will take a look and see if anyone in the webinar here has questions. I've also gathered a bunch of questions from our Instagram account. So if you follow us on Instagram, you know that we've talked about the webinar a couple of times this week, and I've had lots of questions. So I have a list of those as well, commonly asked ones. All right, so we've got one question here. Can you start your practice as a sole proprietor and then create a corporation when income grows? That's a fantastic question.
Yeah, and that's a timely question. We've heard some really bad advice out there. We heard one professor at a school say that you should incorporate while you're a student, and that's so that you can write off your tuition, or like not a great reason. But that advice is not only wrong, but it's illegal in some cases. So yeah, the timing of when you do it is really important. We've heard other people who got advice that you should incorporate as soon as you graduate because it's, I just mentioned, it's costly, right? So you're going to spend, let's say, $2,000-3,000. So you might as well do that up front so you can start saving money right away. For us, that's usually bad advice. So actually, this question, I think, is a pretty good one. I think it's spot on that for most people, we advise operating as a sole proprietor definitely up front. And then once you look through those three criteria and you start meeting those three criteria, that's when you should set up a corporation, right? So it is expensive to set up a corporation. It is expensive to maintain that corporation on an ongoing basis. So you only want to do it if it makes sense, if there's a net benefit to you. So absolutely, I think that's great advice to start operating as a sole proprietor when you first graduate. And then once you meet that point that you're hitting those three criteria, so you've used up your tuition credits, your income is stable or growing, and you meet one of those saving criteria, that's the point that you should have that discussion with your accountant, with your business advisors, to see if incorporation makes sense for you.
Yeah, exactly. So like Cedric said, if you have a good accountant, a good advisor you're working with, they'll continue monitoring each and every year as they file your tax return to see, does it make sense now? Are you at that point where this would benefit you and the savings would outweigh the costs? Okay, so next question here. All right. Someone has asked, what are the breakdown of costs going forward? So we talked about the costs, the startup costs being 2,000 to 3,000, and then what are the breakdown of costs moving forward after that?
Yeah, so that's an excellent question. So out of that cost being $2,000 to $3,000, what is the $2,000 to $3,000 for? Like, who are you writing the check to? That's what I'm assuming that question is. If it's not, then we can definitely expand on that if you just want to retype your question.
I think she might mean ongoing costs as well.
Yeah,
right?
so
Like
the ongoing cost
yeah.
of the $2,000 to $3,000 that you're paying. So the biggest component of that is going to be your corporate tax return. So I mentioned that now that you have this corporation, going back to what I said earlier, a corporation is a separate legal entity. So from the Canada Revenue Agency, the CRA's point of view, they now expect two separate tax returns. They have your one personal one that you do, and a lot of people will be familiar with, but now you also have to prepare a corporate tax return. So that's probably going to be your single biggest cost. A corporate tax return is a lot more complex than a personal tax return, which is already kind of complex. To give you an idea of it, we have a couple clients where, for whatever reason, we won't get into it, they just have a corporation that's inactive. They're not using it for anything. So even with that corporation that has absolutely nothing happening, there's no income going through it, nothing, that tax return is still 40 to 50 pages long. So it is pretty complex. That's going to be your single biggest expense. Some of the other things is maintaining what's called your minute book of your corporation. So a minute book is kind of like the diary of a corporation. So it's, all the things that go into, like the same way that we as individuals have birth certificates, a corporation will have what's called their articles of incorporation. It's the document that shows it exists, it's alive, it was created. Then a bunch of other formal stuff. So anytime that you are taking money out of your corporate bank account, you have to, put that in writing. It's typically done once a year, and again, your accountant, your business advisor, they can do all this for you, but that would be another significant cost for you. So it's really, honestly, those are the two big ones, but that probably takes up the bulk of that $2,000 to $3,000 each year.
Awesome. Yeah, like I said, we have a bunch of questions from our Instagram account this week. A lot of them centered around myths that we hear about corporations and, just different myths that are out there within the community of things that people have heard and they've asked me about on countless occasions. So I put the top 3 myths here, and I thought maybe we can go over probably the most commonly asked myth we get is around the middle one. So people think that if you're incorporated or if you operate through a corporation, you can get around regulatory rules that your regulatory body might have set out. So it kind of puts you out of their scope and you can avoid some of those rules that they have around your profession.
Yeah, so I love busting myths. First of all, that's the reason we started this company, was because even you yourself, you're hearing all this bad advice and from a lot of people that you should be relying on to get professional advice, and the things that they were saying, like even to this day. I had a conversation the other day with someone who was pretty high up in the hierarchy of naturopaths, we'll say, or the naturopathic ecosystem. And they were saying some pretty concerning things. And I said, no, that's not correct. Please stop telling people that, because you're going to get them sued or audited or worse, right? So one item, that we've been hearing more and more is, if I set up a corporation, I can get around, Kono rules, or whichever profession, whichever regulatory college in other professions, in other provinces. And this is not true, right? So, there's a lot of good reasons to set up a corporation. We just want to make sure that you're doing it for the right reasons and that you're fully aware of all risks and opportunities that come along with it. And one thing we hear is that if I set up a corporation, I can charge people whatever I want for supplements, let's say, because then, Cedric, you just said corporation is a separate legal entity, right? It's not me doing it, it's my corporation doing it. And that's what they've heard from other people. Unfortunately, you always end up in this trap where, you might be okay on one thing, but then, corporations are complex things. And if you don't set this up properly, there's 5 other requirements that you didn't even know about that you might be offside on, right? So Kono has said a few times that there's no legal way that you can use a corporation to get around some of their rules. And I can actually see some of what they mean. I mean, I'm a regulated professional myself in an accountant, and I know I can't just set up a separate corporation that has nothing to do with accounting and give bad advice out of there. Like that would not be something that's okay, because now that we are regulated professionals, NDs, accountants, etc., we are held to a higher standard. So the tricky thing of what they said is there's no legal way around it. So you always have to look at the full rules, and almost, you run a risk of not knowing what you don't know, because if you think you're okay with this rule and you set up accordingly, but then these other rules that you don't even know exist and you might be offside of them, that's where you could get yourself in trouble. So yeah, that's a concerning thing that we're seeing that we really want to make sure people are aware of.
Yeah, for sure. Another main myth that I get asked about a lot and I hear a lot is that people think that you can't get sued if you're operating through a corporation rather than operating as a sole proprietor. So maybe you want to speak to that one, Cedric.
Sure, absolutely. So when people say you can't get sued when you operate through a corporation, there's actually a little bit of truth to that. It's almost like a dangerous amount of truth. So let's say I was let's say I was operating a dollar store, I don't know, something like that. So what I would do is I would set up a corporation, and the corporation is going to be the operator of this dollar store. I'm selling a whole bunch of knickknacks. And then let's say someone comes to my store and they trip and fall. So horrible accident. What would happen is they would sue the corporation. They wouldn't sue me personally. So my personal bank account, my house, etc., that would all be safe because they're not suing me personally. They're suing the corporation, right? It's not quite that cut and dry when it comes to professionals such as accountants, NDs, etc., in that there's the law in Ontario, and this isn't Kono rules, this is an actual law, same as any other law in Ontario, that says any kind of incorporated professional, you can't put away your professional liability by operating through a corporation. So if you are, let's say, practicing through a corporation and you're doing acupuncture on a patient and you accidentally pierce their lung, let's say, your liability, your professional liability, would still fall to you personally. So even though you're still operating through a corporation, the Kono rules and the Ontario law would say you are personally responsible for that. The fact that you're using a corporation is entirely irrelevant. There are some reasons, some ways that you can use a corporation to limit some of your legal liability. Like if you're a clinic owner, you might, limit some of your, if you took out debt and you can't repay it, in some cases, you might get some of the benefits. Some more general liability issues, you might be able to limit some of that. So there are some situations, but it is much more limited than I think a lot of people realize.
Yeah, for sure. And every province has similar regulations around that. Like you were talking about Ontario, but every
Exactly.
province has similar things for that.
Exactly.
Yeah. Since we're here, do you want to just address the last myth before we answer
Sure.
some more
And the
questions?
last myth around being complicated. So yeah, I mean, full transparency, it is complicated to set up a corporation, to set up and then to maintain a corporation. There's a lot of paperwork. We just incorporated, I think it was like 2 or 3 people last week. And the paperwork for each one of those was probably 50 pages or so, right? So there is a huge amount of paperwork that gets done. But the beauty of it is you should have a professional advisor that tells you and walks you through that paperwork, and that highlights just the areas where you need to pay attention to it or sign it, and they walk you through it in advance so that you know what you're agreeing to. There's a ton of legalese in these things, so you want someone who can tell you what that legalese means, translate it for you, and also just keep on you, so that if you have to update your minute book, for example, that's one of the things that we talked about on an ongoing basis, or file your corporate tax return. You want them to make you aware of that and to work with you to get it done, rather than just setting this up and charging you $20,000, setting it up and then walking away from you. Like, you don't want that kind of relationship. You want an ongoing relationship where they can assist you with all those complexities.
Definitely. Hand holding is key.
Yeah, absolutely.
So one of the questions that I get asked a lot is around saving for retirement. So, of course, as people who are entrepreneurs, we're running our own businesses, we should be, rightfully so, concerned with retirement savings
Yep.
because we're not necessarily getting a huge pension when we do retire. And I was actually asked this question this morning when I was chatting with an ND. So, it's a great one. She had asked, how can using a corporation help you save for retirement?
That's a great question. And I love the fact that the NDs are starting to ask that question, right? Like it's something that seems pretty far off retirement. I can't imagine that. But it's a good question that you should start planning for and thinking about. So the great thing about a corporation is we just talked about all those tax savings that come with being incorporated. And the idea, if you think back to Sarah, so she was that ND making $50,000 a year, and she was, paying $12,000 as a sole proprietor versus $6,000 as an incorporated professional. So she's saving $6,000 a year. The idea is that you save as much as possible in the corporation. So in Sarah's example, she would be saving $6,000 a year, just keeping that in the corporation, and she could invest in anything that you can typically invest in, right? So like mutual funds and exchange traded funds, ETFs, like all those things that you typically hear about, GICs. Um, the idea is that all those tax savings, you would keep it in the corporation so that you can use that as your retirement fund or your maternity fund or whatever you want to use it for in that saving capacity. The idea is save as much as possible, leave as much possible in that corporate bank account so that you can invest it for all those big ticket items like maternity, retirement, etc. That's the idea behind it.
Yeah, absolutely. I mean, pretty much all of us who are entrepreneurs, we need to depend on ourselves for our retirement fund.
Right.
So it's something that is absolutely necessary, but saving through your corporation is such a fantastic way for people like us.
Exactly. Like that's the idea. No one's gonna look out for us except ourselves, right? So that's what we have to do.
All right. We kind of covered this question in a slide that we did today, but I do get asked about it a lot. It goes along with the myth. Someone will say, like, oh, I hear that, or I've heard that you have to be practicing for 10 years before it makes sense to incorporate, or insert any number of years there. But usually it's over 5, often at least 10 years that people have heard that after that point, after you reach a decade in practice, it makes sense to
Sure.
incorporate.
Yeah.
So
Yeah.
maybe you could talk about that.
I hate hearing that. I really do, because it sort of speaks to this general mentality that, puts all NDs in one bucket. And it says you can't incorporate until you've been practicing 5 years or 10 years. You can't incorporate until you make more than $100,000. And it treats
That's another common
all
myth.
NDs as if they're the same person, which we know is not true, right? Everyone's unique. Everyone has their own individual circumstances and tax situations and all that. So, I mean, I hate those rules. And that's why when we created that checklist of ours, we tried to make it as individual as possible. So at the end of the day, you should still get an incorporation assessment. Talk to your accountant about that. We do it for free for our clients when they reach that point. Once you're hitting those 3 criteria, you've gone through your tuition credits, your earnings are stable, you're saving enough money, that's when you should start thinking about it. Nowhere in those criteria do we say anything about having practiced for 5 years or 10 years. We hate those general rules. It always needs to be specific to the individual.
Yeah, absolutely. That was a good explanation. We just got a couple minutes left. Maybe what we can do is go over the process so like people can set expectations in terms of when they do incorporate,
Sure.
because
Yeah.
most of you probably will at some point in your career. When you do incorporate, what can you expect in terms of the process for doing so?
Yeah, I mean, that's a great question. So, you know, what does it mean to actually incorporate? What do you have to do? How long does it take? That's great. So for us, we do our 24 hours turnaround. So we can incorporate really quickly. Even submitting paperwork to Kono, they've actually been really good with us. We've gotten paperwork back from Kono within 2 days most of the time, which when we talk to a lot of NDs, they're shocked at that, right? Like, how do you get anything back from them? And all the other colleges
Lightning speed.
were similar. Yeah. So the idea, that's the timeline. It's really as fast as you can move. I mean, we go pretty quickly, so it's just taking the time to walk our client through the various steps and making sure they're comfortable. The starting point for all this is that incorporation assessment. So what we do is, once we take someone on as a client and they're interested in incorporation, we give them this booklet, and the first part of it is explaining a lot of what we talked about before, but a little bit more detail. What does it mean to be operating through a corporation? What are the tax benefits, etc.? The second part is their specific situation. So looking at your income, your spending profile, all your tax attributes, etc. And we say, this is how much you can expect to save by operating through a corporation. And it comes with a recommendation as to whether it's worth it or not for you in that situation. Then once we decide collectively, mutually, that incorporation is a good idea for you, we then prepare all the paperwork. So we will prepare all the government filings, the filings with your regulatory college for whichever province you're in. And then we'll sit down with you and we'll go through that paperwork together so that you understand, out of this 50 pages that I'm signing, what does it mean? Like, what does all this mean? So we walk them through it, and we give them a guide that talks a little bit more around, what does it mean to operate through a corporation, etc. And then on an ongoing basis, we, of course, maintain communication always. There's a lot of questions, especially upfront, around what it means to maintain a corporation, what admin steps you should be doing, how do I keep it in good standing with both my regulatory college as well as with the government. So we help them through setting up that corporation and keeping it in good standing. So all this takes anywhere from, a few days to a few weeks. It sort of depends on the individual. We always like to do it as quickly as possible so that we can really churn through it.
Amazing. Okay, so that's a really good overview. Looks like we are out of time, but
Well, that really flew by, didn't it?
It did. It did. Hopefully it flew by for you guys. We just want to say thank you so much for joining us. It has been such a pleasure. Like we mentioned, if you want more information on incorporation, or if you want one of those incorporation assessments for yourself, you can go to holisticbusinessadvisors.com/incorporation. There we go. /incorporation, and check out that site. We also just want to say thank you to Fullscript for hosting us today. We love what they do. We love that they make your lives easier as practitioners. And I mean, that's our main goal too. So it's a perfect pairing. So thanks guys. Hope you enjoyed it.
Thank you.